Welcome to This Explainer. Let's just jump right in today because we are unpacking a truly staggering reality, America's student debt crisis. We're going to look directly at the data and see exactly how the classic promise of a better life somehow morphed into what feels like a financial life sentence for millions of people. You know the phrase, right? Go to college and your life will be better. We've literally all heard this foundational promise. It's a mantra that was sold to an entire generation of students and parents. But as we dive into the data today, you'll see that for millions of Americans, this expectation didn't lead to freedom at all. Instead, it became this crushing bill they just can never seem to stop paying. It's like looking at two completely different worlds. There's just this stark contrast between what society told young people and the financial suffocation they're actually experiencing today. On one side, you have the promise, a guaranteed path to freedom, buying a home, building a family. On the other side, the reality, delaying all those major milestones, living paycheck to paycheck, and honestly, just dealing with lifelong anxiety. Let's look at the actual numbers that created this massive divide. Okay, let's zoom out for a second and look at the sheer scale of this. $1.84 trillion. Americans now owe a combined $1.84 trillion in student loan debt. To put that into perspective, this is the second largest household debt category in the entire country, sitting only behind mortgages. We are talking about a sum that is larger than the economies of many entire nations. Now, if we break that massive macro figure down to the individual level, the average borrower carries over $43,000 in debt. And remember, that's just the average. For a young professional just starting out, this acts as a massive weight tied to their ankles before they've even had a chance to build their life. Now, this part is absolutely wild to me. The average repayment timeline is 18.5 years. Think about that for a second. A 22-year-old graduate might still be actively paying this off well into their 40s. They're essentially making payments for nearly 2 decades for a version of themselves that doesn't even exist anymore. They're buying uncertainty rather than stability. All right, so that brings us to Section 1, the macroeconomic anchor, and a system yielding mathematical exhaustion. So what does mathematical exhaustion actually look like? Well, the system is producing debt way faster than people can escape it. Right now, 3.6 million Americans owe more than $100,000 in student debt. That is a huge jump from 2.5 million just a few years ago. And here's the so what for everyone, even if you don't carry any debt yourself. Research shows that for every increase in this burden, consumer spending power drops dramatically. It literally starves local economies because fewer people are buying homes, eating at local restaurants, or starting new businesses. If you're wondering how the repayment trap actually catches people, it's right here in the interest rates. We've seen a 138% interest rate explosion over just 5 years. Federal undergraduate rates jumped from 2.75% to 6.53% today, and graduate loans are climbing even higher. This creates a terrifying treadmill effect where balances actually grow even while borrowers are actively making their monthly payments. It just breeds hopelessness because all that endless effort doesn't yield any visible progress. Let's move on to Section 2, root causes, and how exactly America created the system. So how on earth did we get to a reality where nearly 6 million Americans are completely delinquent on their loans? The sources point us to 4 fundamental root causes. First, the commercialization of education. Universities slowly transformed into these massive economic machines, charging absolutely exorbitant tuition. Second, the collapse of affordable opportunity. Living costs exploded while wages completely stagnated, making it virtually impossible to pay your way through school with just a part-time job anymore. Third, extreme social pressure and psychological manipulation placed on teenagers to achieve status. And finally, the broken labor market. We call this degree inflation, where employers demand expensive degrees for jobs that historically never required them. But here's a really crucial piece of the puzzle. This burden isn't shared equally across the board. Women carry nearly 64% of all outstanding student debt. This is largely driven by women pursuing graduate education at higher rates, which then collides with the realities of ongoing wage gaps. And that makes repayment significantly harder for them than their male counterparts. And the racial disparities we're seeing in the data are just as alarming. 4 years after graduation, white graduates typically owe about 78% of their original balance. But Black graduates, they owe around 105% of their original balance. The sources are very clear that this isn't stemming from reckless borrowing. It's happening because interest accumulation dramatically outpaces repayment, quietly compounding systemic inequality over time. That leads us to Section 3, the hidden human cost, exploring identity pressure and exhaustion. Let's step away from the macroeconomic spreadsheets for a second. Think about the daily psychological damage. I did everything right, so why am I still struggling? This haunting question is what so many borrowers ask themselves every single day. Because society often links financial success directly to personal worth, this situation completely destroys self-esteem. It links heavy debt to severe anxiety, chronic stress, social isolation, and just intense burnout. It stops being just financial pressure and morphs into full-blown identity pressure. Take, for example, a 29-year-old nurse working in Texas. She earns decent money and she really wants children someday. But secretly, she's delaying motherhood because after taxes, rent, groceries, and her loan payments, she simply lacks the financial breathing room. She isn't lacking ambition at all. She is just lacking capital. Or picture a young married couple. They have $140,000 in combined student debt. For them, every single month feels like survival. They postpone home ownership, they avoid taking vacations, and they just work constantly. Over time, their marriage slowly devolves from a partnership built on love into an exercise in sheer financial survival and management. And this isn't just a young person problem either. This shadow follows Americans for decades. Take a 57-year-old American entering their senior years. They might have weak retirement savings and still find themselves handcuffed by loans, paying off debt for both themselves and their kids. In fact, older Americans over 50 still owe around $452 billion collectively. This causes highly elevated stress levels during a time in their lives when they really should be resting. Which brings us to our final part, Section 4, Pathways to Freedom, looking at individual and collective solutions. While the resulting entrepreneurship crisis and housing freeze do threaten our societal stability, it's not all doom and gloom. Borrowers and policymakers aren't entirely powerless here. As individuals, there are very practical steps to take. First, choose affordable educational paths. Trade schools, community college, or online certifications offer massive economic value without the catastrophic debt. Second, aggressively leverage available repayment tools, like income-driven plans and public service loan forgiveness. And third, we have to shift the cultural mindset. Young Americans absolutely must stop equating their personal self-worth with an elite, expensive university logo. But zoom out again, and on a collective level, this explainer highlights that we literally have to confront difficult systemic reforms. We desperately need tuition restructuring, greater public investment, massive interest rate reform, and transparent university accountability. Because simply put, a society cannot endlessly load debt onto its young generations and expect long-term economic or social stability. It just doesn't work. So the ultimate takeaway here isn't that higher education is bad. Absolutely not. Education matters deeply. The goal is to rebuild a system where education creates freedom rather than fear, a system where your ambition doesn't require a lifelong subscription fee that completely drains your optimism. I want to leave you with this provocative thought to consider today. Will we rebuild a system where ambition doesn't require lifelong anxiety? Honestly, how long can a nation survive when its citizens lose their optimism? Think about what you can do to break that silence today, whether that's having open, honest conversations about debt, advocating for better financial literacy, or really rethinking the true cost of opportunity. Thank you so much for joining me for this explainer.